Hey, welcome back everybody. You're tuning in to howtoplaystock.com. My name is Kepley. Today is June 28th, 2016, and I wanted to cover on the topic of a financial market today. This is called the Forex market, and for those of you who are not familiar with this financial market, it's foreign exchange, so it deals directly with currencies. Alright, and pretty much it's the world's largest financial market that is out there. According to the information that I've read and some of the books that I've read, this market exchanges roughly about $3.5 to $4 trillion worth of currency between buyers and sellers on a daily basis. So to put it in perspective for you, it's a huge market, and it's only growing. For most experts, they say that the market should reach somewhere in like the next 10 years. It should reach approximately like more along the tunes of about $5 to $10 trillion being exchanged in currency on a daily basis. So it's growing. It's a massive market, and that leads me to the next piece of this video that I want to touch on, and that's the discussion of expert advisors, or the Forex currency robots, because I get a lot of people asking me about these robots and wanting to try them out. Okay, now most people who have never invested in Forex market are probably attracted to it because you can make a lot of money, and it's kind of a short-term type approach to I wouldn't call it investing, it's more speculating. I know from some of the conversations I've had with people in the past about the Forex market and my experience that I had with it, they'll ask me, is it similar to gambling? And I would have to say, for the most part, yes. Okay. Now, it is a little bit different than gambling, say like a casino, in Las Vegas or something like that, because you have more control over some of the the stuff that you can do. It's not like, putting in a token at a slot machine and then just crossing your fingers and hoping you win. It's nothing like that. It's basically you're implementing a plan, a strategy, and then placing a trade on a currency pair. Okay, now if you're not familiar with some of these terms that I'm using, it's okay. Today, briefly, what I want to just go over with you guys in regards to the Forex market are topics, such as taxes, broker spreads, lot sizes, the fact you can buy and sell a currency, so you can basically bet if it's going to go up or down in price, things of that nature. But I want to get back to the topic of the Forex advisors real quick before I get into that with you. The Forex advisors, they're called expert advisors, or robots. And from my experience with them, okay, I tried Fat Turbo. I was a user of the Fat Turbo robot, and my experience with those was pretty interesting. Okay, I made some money with them, but again, it was short term. It was only for a couple months. I ended up doubling my profits with Fat Turbo. That was the first month. The second month, I continued making some profits on it. Excuse me. But by the third month, guys, the robot couldn't take into consideration things that you need to learn how to do on your own when it comes to being a Forex currency trader or a day trader. All right, and that was fundamental analysis that I'm talking about here. The robots could not predict fundamental analysis, meaning they can't foresee, governments creating meetings on the weekends, such as like the G20 summit. It can't foresee that kind of stuff, and those are meetings that take place on the global markets, at least a few times a year. And what they do is they discuss interest rates for countries and changing monetary policy and things of that nature. Robots can't predict that, and therefore, if one country decides to lower its interest rates overnight, kind of like what we saw with China, for instance, back in August of last year, the robot can't predict that, and if you got trades placed with the robots, eventually what's happening, what will happen is the robot is going to lose on those trades, okay? And if it doesn't, it's probably getting lucky. So my personal opinion with Forex currency robots, guys, they're kind of like, I would compare them to like training wheels on a bike. So you know, when you're learning how to ride a bike, you want to put training wheels on so you can kind of learn how to, how to pedal, how to steer the bike, things of that nature. It's the same thing with currency trading. So if you're using a robot, the only reason why you should actually even attempt to use a robot is so that you can, number one, not lose your money like right off the bat, okay? Because it will allow you to make some winning trades. It'll help with your money management, and I think honestly it just kind of helps you overall understand how the brokers work, okay, and how the currencies move and price fluctuations. It gives you a good good exposure to all this stuff so that you can kind of understand how it works. But that's all it's good for. Outside of that, I wouldn't use it. What I did was basically I got onto Fat Turbo, learned how that worked, and I kind of got some exposure to the Forex market. During the 2 months that the robot was making trades for me, what I would do is I would go read a book or do some research on the Forex market and learn about it. Learn what other day traders were doing and how they were succeeding at their day trades. Okay? And then what I would do while the robot was placing some of these trades, I'd go in and manually start placing a few trades here and there and just watching them and seeing, how what the outcome was. And that's something I would recommend doing if you're looking at playing the Forex market is start out doing something like that, as opposed to jumping right in, putting money on the table, and not knowing what the hell you're doing. Because if you don't have a clue what you're doing, I can tell you right now, you're going to lose some money. And that's, again, it's the number one rule to investing and day trading, is you don't want to lose your money. So I would highly recommend doing that. So outside of Fat Turbo, though, with other Forex robots, you may have one that's working right now, but I can tell you as a day trader and having experience in this, eventually it's going to lose for you because of, the unknown variables that I was explaining earlier, okay, in regards to monetary policy changes, fundamental analysis, okay? And it's important you learn how to understand how that works, so that you can start implementing your own fundamental analysis and playing that into your strategy for planning out your trades, okay? But meantime, if you're on a robot right now and it's working for you, that's fine. Keep doing it. But again, I highly recommend and suggest that you start placing some of your manual trades yourself and doing some research on, on the markets, because, again, guys, robots, there's a lot of discussion about artificial intelligence with these. Look, I was a network engineer for 7 years, okay, in IT market, information technology, and I can tell you from my programming background, writing algorithms and scripts, I can tell you right now that the only artificial intelligence that we have as far as a robot placing trades that's going to win 100% of the time and never lose, the only robots that do that are the ones that control high-frequency trading on Wall Street. These are supercomputers, okay? Now, if every robot out there or expert advisor placed 100% guaranteed wins for us, we'd all be millionaires. But we're not, so that should tell you right there that it doesn't work 100%. You are going to lose some trades with the robot. And after a couple months, just watch what happens. If you don't want to take my advice, just watch what happens. Okay? But don't say I didn't tell you so. Alright, so getting off the discussion of expert advisors and robots, I want to go ahead and touch on the financial market for the foreign exchange. And I'm just going to cover these topics real briefly, because there's a lot of information on foreign exchange markets, and I can make several different videos about each one of these, which I'm going to do here in the future. But for today, it's just kind of getting the basic understanding of the Forex market and some of the different different aspects of it that you need to pay attention to. Okay, so getting started though with any investment that you guys make, whether it's real estate, stocks, tangible assets, whatever it might be, you need to look at the taxes on your investments, okay? So I figured the best place to start with Forex, the foreign exchange market, is with taxes. Okay, and here's how it works. The taxes are set at a default, which is Section 988 on the tax returns. Okay, and only $3,000 in capital gains can be deducted. All right, so basically, if you accumulate $3,000 in profits for the year, and beyond that, let's say you accumulate like $5,000, only $3,000 of that can be deducted. It's also treated as ordinary income. Okay, and the cap tax limit on ordinary income is 35%. Now it depends on your tax bracket and how much you actually make for the year, which will determine, the tax rate, because the tax rates can vary on ordinary income. So that's something to pay attention to on your taxes. The other thing I like about the Forex, and this is what it has to offer and separates it from every other market out there, is that you can place trades on the Forex market 24 hours a day. Okay, and here's why. Because you have a U.S. market, it's basically integrated globally. So you have U.S. market, you have an Asian market, a European market, etc. And so therefore, the hours of operation for the market are 24 hours daily. The only time that those markets shut down is on Sunday. All right, and I believe they open back up on Sunday night around like 5 p.m. Eastern. I'm about 95% certain of that. I would have to go back and just make sure that that's the right time frame, and I'll cover it in a different video if it's wrong. But I'm pretty sure it's 5 p.m. Eastern time the market's open back up for the next entire week. But from like Saturday midnight to Sunday around 5 p.m. they're closed. Okay. So you can obviously see if the markets are open 24 hours a day, you have a lot more potential to make money. Okay, and that's very attractive for a lot of people, and that's why they decide to go into the foreign exchange market, because with regular stock market it can close normally it closes around 4 p.m. all right, and then it's closed until the next day. Forex, you don't have to deal with that. The other thing I want to talk about real quick with you guys is broker spreads. All right, broker spreads, this is how the brokers get paid. Okay, now I'm not going to get into a whole lot of detail on PIP calculations, because it kind of ties into PIP calculations, but just know that basically with broker spreads, they have a margin. Okay, it's a margin of pips, and I'll explain what PIP calculations are in another video, but for the sake of time, and saving time today, I'm just going to cover kind of the theory behind broker spreads and how they get paid. So basically what they'll do is the broker will determine a profit margin based on PIP calculations, and these profit margins can be widespread, or they can be compacted and closer together. So you might have a spread with a PIP calculation of I don't know, like 100 pips, okay? Or you might have a broker spread that has a PIP calculation, incorporated in the profit margin of say 50 pips. Now, 50 pips is going to be a lower profit margin as opposed to the 100. Therefore, it basically means that that's the commission that you're going to pay on the trade to the broker. So after your trade hits like 50 pips, and this is just an example, it could be something completely different depending on the broker, because every broker is somewhat different in regards to the broker spreads. But let's say you hit the 50 pips in their spread, then your trade goes into a profit. But it has to get to that 50 pips first. so that the broker can get their commission on the trade. All right, and that's how they get paid. So anytime you hear somebody talk about broker spreads, that's what they're referring to. Now, the other thing I want to talk about real quick is the 5% rule, and this is for speculating. And you might notice how I mentioned speculating instead of investing, because that's what you're doing, is you're speculating on each trade. Okay, you don't know what the markets are really going to do. You have no clue. The only thing that you know is you have some technical analysis that you can use. You have some fundamental analysis that you can go off of, and you can implement a plan before you even place a trade, and use some other strategies that I'll show you here later. But other than that, you don't know what the markets are going to do. Okay, so that's why I talk about the 5% rule for speculating, not investing, because that's what you're doing, is speculating. The 5% rule is basically this, guys. For every trade that you place, you're only going to want to take, so let's take, for instance, just for example, let's say you have $500 to play with, right? And you want to put that into a broker account to play Forex currencies. Out of that $500, you're only going to use 5% of that to place on one trade, okay? Now, here's the cool thing, you can play multiple trades on the Forex market, or you can place multiple trades and have them all going at the same time. But again, after you've taken 5% of your money from the 500 to place on a trade, now you're only left with, you're not left with $500 cash reserves. You're left with, whatever 5% of that 500 is, which I believe is like $25. So you take $25 off of the $500 that you had as your initial amount, and you can take another 5% off of that and place that into a trade. Okay, and that's kind of what I mean by 5% rule. The reason why you want to do this is so that you're not playing with all your money on one trade. It's there for risk management. It's there to protect your money so you don't lose it all. Because the thing is, and I'm going to explain lot sizes real quick, and then kind of transition into that. But the thing is here, the main point is, you can make money really fast, or you can lose money really fast in this market. So you have to be very, very careful. Is it risky? Yes, 100% risk. Okay? Now you can reduce that risk by implementing all the stuff that I'll show you in later videos. But getting back to the 5% rule, just remember, only use 5% of your initial investment for each trade. The other thing I want to talk about here real quick is you can buy or sell, which is nice. So again, if the currency is going up, you can place a bet saying that the currency is going to go up. You can make money that way. Or if the currency goes down in price, you can make money on it going down. Okay, now you can't always do that on stocks, like on the regular stock market. The price goes down on a stock, and you've bought up multiple shares of a company, and the stock price goes down, you're losing money, unless you're playing something, like an ETF that deals with volatility. The last thing here I want to touch on, because this video is running a little bit long, I'm going to wrap it up, is lot size. And the lot size is basically used as leverage. Alright? So, and I'll explain lot sizes here in another video as well. And I'll dedicate a whole video to just lot sizes, because you need to know what that leverage is on each trade that you have placed. So the lot size is leverage, and basically the bigger the lot size, it magnifies your profits. Okay, so it's like borrowing money from a bank, and because you have more money available to you on the trade, your profits are magnified, and you're not playing with your own money, you're borrowing money through something called the lot size. So you can expand this lot size to like 1.0, which would be a full lot size, or you can start out with a very minimal lot size of like 0.01. Okay, now it's recommended as a beginner, you want to start out with a lot size of 0.01, and that's so that it doesn't magnify your profits or losses too much. It's barely noticeable. Okay, but it allows you to get some practice, and that way if you're losing on some trades, you're not losing all your money right away. So just remember, the bigger the lot size, the more profits you can make, And if you lose and you've got a bigger lot size, the quicker you're going to lose your money. Okay? That's pretty much it for today on foreign exchange, guys. Again, I just wanted to briefly touch on the robots for you. There is a video that I have on momentum trading strategies. So if you're already familiar with the Forex market and you've been trading for a while and you want to improve your chances of winning trades, check out the video that I have on momentum strategy trading. It's basically finding uptrends in markets. I'll leave a link below here that you can click on. That'll take you to the video. It'll show you exactly how to capture, you know, the movement and uptrends on currencies. It also works on regular stocks. Okay, and I can attest to this. I can reaffirm it because I had 10 months experience day trading on currencies, and I have over 2 years day trading on ETF volatilities using that strategy. And in both cases, I had over on one of them in the currencies, I had a 92% win rate in 10 months. Okay, and that was on 50 plus trades that I made. And then I've also, I've got a win rate of over 90% on volatility ETFs. Okay, and I've placed hundreds of trades on that. And I've used this strategy in both cases. So I can tell you it works. I actually lived off the income for almost a full year. It was about 10 to 11 months from 2015 going into the fall months of 2015. I didn't have a day job, so I just lived off of it. But I can tell you it works. So with that being said, guys, that's all I have for today. Remember, when you're placing your trades, have conviction, okay? And you have to be patient. So get your plan laid out for you before you even think about putting your money on the table for a trade. So be patient. And remember, in comes the outcome. So regardless, if you start losing a few trades here and there, go ahead and stop. Just take a step back and take a breather. There's no law says you have to continue trading day in, day out, minute after minute. So just remember that. And remember, in comes the outcome. You do not want to lose your money. All right? You're tuning in to howtoplaystock.com. If you guys need any more information on Forex market, please check out my websites. I'll leave links in the corners here for you. Or you can check in the description below. The websites cover a lot of the topics that I'm talking about here, like the fundamental analysis and technical analysis. So if you have any questions or you want more information on that, go ahead and check those out. If you find this information beneficial to you, go ahead and like the video and share it with others, okay? I'll be releasing some more videos here soon on some of these topics that I covered today. But until then, remember, in comes the outcome, and just be patient with yourself, guys. All right? I'll talk to you soon.